Starbucks stock is at an all-time low valuation. Let's take a look at whether or not it's attractive right now. Take a look at where Starbucks has been over the past 5 years. You can see the stock's gone almost nowhere. Really been a poor return. This is in the same time where the stock market has rallied significantly. So this has not been a place to be in the past. Might be in the future though. This is a Starbucks PE, carried about a 30 PE on average from the 2010 to 2024 range because it was growing like crazy. Now 21, somewhat attractive. We're going to go through exactly where we would think this is incredibly attractive here by looking at the FA page. So first of all, we start where we always do. That's at enterprise value. Starbucks is worth $110 billion. And I want to take a look up here at net debt, right? That's total debt minus cash, $22 billion. Is that a lot of debt that sits in front of us, the shareholder? It is. We compare that $22 billion as always to the EBITDA, and we get about a 3x leverage ratio. That's 7 divided by 22. What we really like to see is 2 or less here, and we see 3. So that's a lot of debt holders standing in front of us. So we're going to want an even cheaper valuation if all of these folks are going to sit in front of us. And we're going to want to either a higher dividend or them to do buybacks or something like that with free cash flow. So we're going to want to see a lot of cash coming off of this company to help us, the shareholders. Now let's take a look at valuations. EV to EBITDA right now is about 15x. EV to net income is about 26x. And free cash flow yield is about 3%. That's using that free cash flow number, that net income, and that EV to EBITDA right there, right? All mediocre valuations, right? EV to EBITDA, we'd love to see under 12 here. We'd love to see EV to net income well below 20, something like 15 or 18 would be amazing. Free cash flow yield, love to see about 5 to 7%. Why? They could take all that free cash flow, they could buy back stock, which helps us as a shareholder, or they could pay a dividend with it, which helps us as a shareholder, right? Right now, that 3% free cash flow yield with all that debt, probably not going to do us a ton of good, right? So where do we want to see Starbucks? It's currently trading about $77 before we step in. About 65, somewhere in that range would be really good for us. We'd probably step in and really like that name if it gets thrown out. We'd really need bad news for that to probably happen. Maybe it never gets there, but right now this is just not attractive enough for us to step in. But it's getting close, and so we wanted to alert folks to that. If you have any questions, concerns, or if there's something you'd like to see us do, hit us over email, and we'd love to go through it for you.